Throughout 2023, the real estate market has been riddled by low inventory, high home prices, challenging mortgage rates, unaffordability, low demand, and industry shifting lawsuits. It is a lot for just 1 year. Some people are comparing this year to 2008, and some people are comparing what is happening now to the 1980s. But which one is it? What is really going on? And more importantly, where is our market going in 2024? All that and more on this month's housing update with market predictions for 2024. This is Celina Acosta, your trusted real estate advisor, bringing you the last real estate market update of the year for Phoenix, Arizona, coming up. Don't be fooled by the current market. December is typically the calm before the storm, and this year is no different. As an early Christmas gift, we got a nice interest rate cut, and experts are saying that interest hikes will be over for now as the economy is positioned for a soft landing. New listings are at their lowest level this month as many sellers opt to wait until January to list their home. Wanting to sell your home till after the holidays is very common, and as a result, home supply feels stale and picked over. However, this little break is a window of opportunity for negotiations as the current sellers want to be under contract before the end of the year and before the wave of new listings that come every new year. The time of the year from Thanksgiving to New Year's Eve is a nice little window for buyers to get specials and deals such as sellers concessions, price reductions, builder incentives, and flexible sellers. Once spring comes in, a lot of these deals will be gone. Last month, the Consumer Price Index inflation rate took a positive turn, so the Federal Reserve did not raise the federal funds rate. Both measures were key factors in the current mortgage rate decline. This month, the inflation rate once again declined, and everyone expects the federal funds rate to remain unchanged. So there's a lot of hope and anticipation that rates will continue to decline into 2024. The interest rate cuts that we had lately are preventing Phoenix from dropping entirely into a buyer's market. We're still holding strong. The median home price actually went up 4.3% from a year ago. I can't stress this enough. If you're a buyer, take advantage of this quiet time. Once the new year begins, the market could heat up quickly as it usually does. While the Phoenix metro area is in a balanced market overall, it is not evenly distributed. Location matters a lot. As the recording of this video, most of the cities in Pinal County and in the edges of the valley are in buyer's markets. These cities include Cave Creek, Sun City, Surprise, Buckeye, Maricopa, Casa Grande, Queen Creek, and Gold Canyon. Balanced markets are Paradise Valley, Goodyear, Peoria, Litchfield Park, and all other cities are still sellers markets, but weaker than they were a month ago. About 50% of closings right now include seller concessions to the buyer, and depending in the area, this number is bigger. In the cities that are buyers markets that I mentioned earlier, 70 to 75% of the closings there gave concessions to the buyer in the form of seller paid closing costs. These concessions fluctuate between $10,000 and $13,000. Demand is expected to increase once the new year begins, but the increase of the supply of homes for sale may offset it. Prices are still considered high by some buyers, and some still want to wait and take their time before they make a decision to buy. So it will most likely result in higher days on the market for current listings. Currently, our average days on the market for listings is 37 days. If you're a home seller, I recommend that you focus on getting your home in the best condition possible. Budget appropriately to offer buyer incentives and expect buyers to come in lower than asking price. If your home is in top shape and priced right, it will sell faster and at the best price in this environment. Be the house that offers the most value for a buyer. Pro tip, stage and move-in ready homes always command more money. So do the paint touch-ups and the sprucing up and the decluttering before putting your house on the market. For a checklist on how to make your home market ready to get the most money, check out a link below. These are the markets where quality marketing, exposure, and agent experience truly make a difference, so pick your agent wisely. According to a survey, about 30% of people want the market to crash. It is no coincidence that 65% of the American population are homeowners and the other 35% are renters. People who own real estate do not want the market to crash. We want the madness to stop. We want homes to be more affordable for sure. And in general, we want our children to be able to afford a home when they have a good job and good credit. But it doesn't mean that we want things that we own to lose value. In order to make real estate more affordable, there needs to be more houses built. Predictions. If you've been following me for a while, you heard me say that nobody has a crystal ball. Nobody can accurately predict the future. Experts are wrong half the time. So I don't particularly like to predict the future of the real estate market, but every year at the end of the year, I just have to take a shot of what I think will happen based on what I know and based on what I see and what I lived through in almost 2 decades of being a real estate agent. So let's talk about interest rates. As far as interest rates go, I think they will remain about 5% all year. They will fluctuate between 6, 7, and 8%, but I think they will come down to 6% or slightly below 6 after the second half of the year or during quarter 3. This will bring many more buyers back into the market, so demand will be up. Our market is extremely sensitive to interest rates. However, buyers will get used to the rates being in the 6s and 7s. They will never love it, but they will get used to it and proceed business as usual. The people that need to buy a house will buy a house always. The world will never stop turning because interest rates went up. And having said that, the number of real estate transactions will continue to be at the same level, which is low, maybe slightly better in 2023. Only people who can afford it will buy because we are still dealing with affordability challenges and we will continue to do so into next year. So demand will go up. With so much economic growth in Arizona, including the new semiconductor chip companies and battery manufacturers and the high-paying tech jobs they bring, I predict market appreciation of about 4% for 2024. So prices will go up slightly than the 15-year average as inventory will remain low. 90% of the homeowners have an interest rate below 7%. 65% of those are below 4%. So these homeowners will not sell unless they have to. And that's what's keeping the inventory levels low and will continue to do so. If you're thinking of buying a house in 2024, my advice to you is to stay vigilant in your search and take advantage of this quiet time if you can. There you have it. I hope this was helpful. And until next time, don't forget to like and follow for more.